Good afternoon. This is Biztech Asia's Midday Market Watch. I'm Jeffrey Halley.
And I'm Brian Fernandez.
And it's the 30th of January. And our guest today is Glenn Yin, Head of Research and Analysis at AETOS Capital Group down in Australia. Glenn, welcome to the program.
Thank you very much, Jeff. And thank you, Brian.
Well, before we get started, Glenn, let's just have a look around Asian stock markets today and see how they've been performing.
And we're going to start with KL. The KLCI is down 0.04%. Shanghai is down 0.77%. The ASX All Ordinaries is up 0.29%. The Nikkei is up 0.229% as well. The Hang Seng is down a whopping 2.14% now. And rounding out the numbers, we've got the Kospi, which is up marginally at 0.08%. Glenn, your views on market performance in the first half of the day, particularly the outlier there, the Hang Seng, taking a little bit of a beating.
Yes, Brian. Thanks for the update. I mean, as we can see that the Hang Seng is down by a lot again today. I think the volatilities certainly mostly come from the fact that China's Evergrande was ordered to liquidate yesterday by the Hong Kong court. So, I mean, how markets gauge this and considering last week the Chinese government has announced another fresh round of stimulus, so lots of stuff going on right now, and I mean the timing for the Evergrande liquidation comes right after the stimulus package release, so that is something for traders to digest as well. So definitely the volatility will remain in Hang Seng there.
Right, Glenn, thanks for that. It's a heavy old calendar week this week, isn't it? We've got EU and GDP data out today. We've got an FOMC this week, and we've also got a non-farm payrolls on Friday. Some more choppy volatility ahead, perhaps.
Yes, Jeff. So very volatility heavy week, and like you said, it's a US centric week for global financial markets. First FOMC of the year will kickstart in a few hours, and investors will be expecting a decision by early Thursday morning here in Australia. Looking at the currency markets, we can see the USD index that measures the strength of the greenback against a basket of currencies, the euro, the pound, the yen, and so on. It has been very steady. So for those investors who prefer to look at it from the technical perspective, they should be able to see the index firmly standing above the 200-day simple moving average, as well as an upward trend line formed since last Wednesday. So I mean, the momentum is here, and also in line with market expectation that the Fed is likely to hold its federal funds rate at current range. And, like you said, don't forget the GDP data that came out last week shows that U.S. economy is surprisingly resilient. Having beat forecast twice, it came in hot at 3.3% for Q4, following a 4.9% increase in Q3. So these are absolutely astonishing data. They should have no issue for a soft landing. But my biggest question is whether there will be a landing at all, given it might just bounce straight off.
Now, Glenn, which leads me to the next question. We've got a lot of earnings coming out, particularly tech earnings this week. U.S. stocks seem unstoppable. What's your take on and expectations on U.S. equities and also the earnings around the equities?
Yes, Ryan, and yet another historical trading day in New York, as we saw the three benchmark indices hitting another historical high, despite concerns that the US may be dragged into an all-out regional conflict in the Middle East after the troops were killed and a bunch more injured near the border of Jordan. So, I mean, the most important thing is this: if investors seem to be undeterred by this negative information coming out from the Middle East, rather than they're just focusing on reports from the heavyweights, like you said. This week we'll have 5 of what's known as the Magnificent Seven reporting. Kickstarting tonight will be Microsoft and Google, followed by Apple and Amazon on Thursday, and the wrap up the week by Meta on Friday. And the important thing is this: if the Fed holds onto the current rate, and this is likely to dent optimism and cause equity markets to pull back. But then Apple is releasing its reports after market close on Thursday, so the timing is very interesting. And some analysts believe that Apple will likely sweeten up their reports to boost their price and the market cap after its crown was stolen by Microsoft just 2 weeks ago. So will this V-shaped movement take place on Thursday? We'll have to watch and find out. But perhaps the most powerful and the most unpredictable event will be this Friday's non-farm payroll, like Jeff said, which will give us a closer look at the labor market conditions in the US and whether the scheduled soft landing will arrive on time. What we know for sure is that we'll see a tsunami of volatilities this week.
And just coming back to Asia for a moment, this morning we saw Japan jobless data dropping into the calendar. Any particular thoughts on that number today?
Yes, so with this, we have seen a softer CPI data and a softer stance on the BOJ as always. So the job data does give us some clues as to whether this spring wage negotiation will actually pave way for the BOJ's exit to its negative rates. But right now, it's really hard to predict. So we just basically, so for our yen traders out there, I think we just have to watch out for the FOMC to find clues on the dollar movement and go from there, Jeff.
Wonderful. Thanks for your insights today, Glenn.
Thank you very much.
And we've been speaking to Glenn Yin, Head of Research and Analytics at AETOS Capital Group down in Sydney. Pardon my tongue twister there. This has been Biztech's Asian Midday Market Watch. I'm Jeffrey Halley.
And I'm Brian Fernandez.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. It will also be available from our syndication partners, TV stations, radio stations, and websites. Thanks so much for tuning in.